The latest Royal Institution of Chartered Surveyors Housing Market Survey reveals a UK housing market being divided even harder along regional lines, with sales activity and house price still healthy and even improving outside London and the home counties, but continuing to struggle in central London. Its market snapshot for August reveals a downbeat but stabilising property market in London, continuing problems in the South East and East Anglia, but rising prices and activity in Scotland, Northern Ireland, the Midlands, Yorkshire and Humberside. Across the UK, the numbers of estate agents reporting a fall in sales volumes increased by 10%, the most negative reading in 5 months. The RCS say that the main reason for the low level of activity in the market include Brexit uncertainty, the historically low levels of stock held by estate agents, and the recent interest rate rise decision by the Bank of England, which has reduced buyers' appetite. The RCS also say it is very difficult to talk about the housing market at the moment without being acutely aware of the marked differences in trends across the UK. As the latest RCS results highlights, many parts of the housing market actually remain quite firm, whilst the combination of lack of stock and some level of uncertainty, both relating to the interest rate outlook and Brexit, has had an impact on activity. The overall picture in these areas is still encouraging. In Wales, house prices edged upwards in August, but data relating to sales activity and the number of properties coming onto the market remains subdued. However, despite the subdued sales picture and constrained supply, chartered surveyors in Wales remain relatively optimistic about the immediate outlook. In Cardiff during August, we saw fewer viewings of properties by the public, but those that have taken place are more serious and sales are being agreed. The number of new instructions eased back during the course of August. However, as we return from holidays and the restart of the schools, we have noticed a marked increase in new instructions and activity, which should increase sales levels in the months ahead. Turning to the lettings market, the RCS data point to a further decline in rental stock, a trend that has been emerging on the back of tax changes in buy-to-let properties. As the result of the supply and demand imbalance, near-term rent expectations point to further rental growth in the coming 3 months. Rents are expected to rise at a faster rate than house prices in the medium term. Average rental growth projections stand at around 3% per annum for the next 5 years, whilst house prices are projected to rise by around 2% on the same basis. This is Tony Felici, Director of Kelvin Francis Sales and Rentals, saying goodbye until our next update.